Following the US CPI in July, producer prices also peaked. The Federal Reserve is monitoring economic activity indicators, including the price index, to decide whether to raise the key interest rate by 0.50 percentage points or 0.75 percentage points at the regular meeting of the Federal Open Market Committee in September. The Fed also wants to see more evidence that inflation pressures and economic growth are slowing. As a result of both approach, the US interest rate futures market believes that the likelihood of 0.50 percentage points increase in the Fed's September meeting is greater than the likelihood of 0.75 percentage points increase, but nothing is certain. Fed Chairman Jerome Powell said at a press conference in July that 0.75 percentage points rate hike at the September meeting could still be on the table, but the rate decision at that time would depend on economic indicators from now to then. He said he would like to see strong evidence that inflation is slowing if he wants to revert to more traditional hikes. The US Producer Price Index has been negative for the first time in more than 2 years. The US Department of Labor announced on August 11th local time that the Producer Price Index for July fell 0.5% from the previous month. It is the first time since April 2020 that the monthly increase rate, which has been on a sharp upward trend recently, has turned negative. The decline was largely driven by a 9% fall in energy prices, including oil, from the previous month. The Producer Price Index rose 9.8% compared to the same month last year, but the upward trend was dampened compared to the 11.3% increase in June. The rate of increase in the core Producer Price Index, excluding energy and food, also rose 5.8% from the same month last year, slower than the previous month. This comes after the previous day, August 10th local time, when the US CPI rose 8.5% in July from a year earlier, lower than the increase in June. There are speculations that prices, which had been rising sharply, have turned to a calming trend.